before, when we were sort of pushing off this inevitability of a recession, maybe even thinking that there's no landing or a soft landing or something to that effect, that was under the assumption that there would be a June hike and then no more. Things have changed a little bit more, Nathan. So if we are to assume, let's just say that there are 2 more hikes sometime this year, the possibility that we get to 6%, what's your outlook in terms of how that will impact the economy?
Our expectation is, and has been for a while, that the Fed was going to hike a couple more times. I do think that there's likely to be a further restraining effect associated with it. But when I look at the economy right now, I see a very tight labor market. I see a lot of momentum in terms of job creation, spending. Consumers, particularly in the services sector, has remained solid. There's still, by our reckoning, a pretty good chunk of excess savings that consumers have accumulated. And quite frankly, it doesn't look like recession is in the data at the moment. On the other hand, and let me be a two-sided economist, and be a little bit wedded to theory, historically and theoretically, the only way we're going to really unwind this inflation, the tight labor market, the rapid services inflation, is we need more slack in the economy. And that has typically been associated with a recession. So on the one hand, I look at the data and they're strong. When I look at history, when I look at the models, they suggest, well, you're going to need a recession. I just don't know how we get from the strong economy into that recession. And it does seem like the recession outcome is becoming somewhat more remote.
Is it possible to bring inflation down, Nathan, without impacting the job market too much? I mean, there's this sort of ongoing debate, increasingly louder, about whether wage growth contributes to inflation or is caused by which comes first, the chicken or the egg, sort of. Do price increases cause wage inflation because employers have to keep up with the cost of living, et cetera, or vice versa? And I'm wondering where you come down to it, because picking a side or figuring this part out of the labor market, that's going to be sort of key, I would imagine, to how the Fed proceeds. Can it actually bring inflation down without denting the job market too much?
I think it's fair to say that historically, when wage growth has been this rapid, when the labor market has been this tight, and when inflation has been this high, that ultimately it's been necessary for there to be a recession of some kind to unwind it. Now, this is a different kind of cycle. And is it possible that some of the additional boost to consumer spending associated with this ongoing boom in services expenditure, a good part of it is make up for the pandemic. Some of it is driven by excess savings, so savings was accumulated during the pandemic. Maybe that extraordinary spending kind of plays its way through and the economy converges into something that's more sustainable in terms of wages and price and so forth. Now, your question about kind of do wages drive prices or prices drive wages is a very important one. And I think that the answer is, largely speaking, that the drivers exist in both directions. That in certain important ways, wages can influence price, and similarly, prices can influence wages. And I think we've seen that even over the last few years. Now, specifically, if we're in a world where wages continue rising, but inflation is cooling, I think that's suggesting that margins in the corporate sector are coming under pressure. And that is a very interesting set of questions. That one of the features of this cycle is the margins have expanded. And maybe one of the ways that we unwind this with less rise in unemployment is that we see those margins that have risen start to compress some.
So basically, the pain is transferred from the consumer bearing the pain to the corporations bearing the pain.
Exactly.
Which actually
exactly
would work out
right.
for the Fed, because if corporations are bearing the pain, then maybe that price exuberance in the stock market can come down, exactly what the Fed is trying to battle at this point.
Yes, exactly. And your point about it's really a question of who bears the pain maybe underscores economics as the dismal science. That there is likely to be some pain associated with bringing the economy back into balance.